If your boss gave you a raise tomorrow, it might actually not be enough. And that's not because you're not performing good enough. It's actually because the bar to keep up with is getting higher with the day. So by the end of this video, you'll know exactly how much your savings are losing each year. And I will actually give you a free tool to map your plan towards a better reality. Now, look, it's not that you don't deserve the raise. It's actually the fact that you've hit a ceiling with your time and your effort. It kind of feels like you're stuck on a treadmill, like you can see on screen right now. And no matter how hard you work at this point in time, the banks keep printing more and more money. So for that reason, a small salary raise will actually never be enough. Now, if you wonder who I am, my name is Arno, and in the last couple of years, I've been transforming 200 lives financially, allowing people to build a second income online in just a few hours a week without any trading at all. I've been in crypto myself for over 8 years at this point in time, but I didn't start off knowing any of this at all. Let me tell you what it actually cost me to learn this. I trusted a trading mentor, putting in 70,000 euros into the markets just to lose a whopping 40,000 euros in my first trade. Then I trusted a business mentor, losing over 25,000 euros. And if I wasn't skeptical at the start, I would eventually be losing 50,000 euros more. The tuition was insanely high, and the trust was like at an all-time low. And everything I do is about doing the exact opposite of that. Because every single time I kind of kept climbing this ladder just to fall all the way down to step zero again. So it finally got to this point where I understood if I would be changing nothing about my situation, I would be stuck like the majority of people. So I went all in. We're talking about 14-hour days and bins full of paper that was just full of notes that I took after learning my actual stuff. Because on paper, I did it all right. My family was proud. I was having a daytime job in a call center, a nighttime job in a nightclub. I was making quite okay money. And still deep down inside, I had this feeling of being stuck, falling behind, kind of seeing how these prices were going up around me, never being able to keep up with the speed at which they were elevating in real time. So the moment things actually clicked for me was when I understood that working harder was not going to fix the root cause of the issue, which is money being printed out of thin air. So I needed a better way. Because every single year, there was like this invisible, mysterious number that was quietly eating away at the money I was working for. I had no idea it even existed in the first place. So to show you where it comes from, let's start with something pretty boring: how a country actually grows. GDP is actually the score of a country's wealth, and this gets tracked in three main metrics. The first one is actually more people, which brings us to the second one being more productivity, right? So the more people that a country has, the more productivity it can have based on age and all that type of stuff. And then, of course, the last one is more borrowing and more debt. Now, just keep that last one in your mind for a second because we'll need it later on. First, it's important to know that when it comes down to a country, demographics are pretty important. As a population is aging, like you can see on the chart right now, as people get older, so does productivity actually go down. So what we see in the US, Europe, and China is that as population gets older, productivity is going down, and there's not enough younger workers available, just like we had it in the old way. So there are fewer people working, and due to productivity, the whole thing grows slower. So that's actually already 2 out of 3 things from that GDP slide a second ago that's gone right now, and we just started. It's crazy. As people are tapped out and productivity cannot last longer at the rate it used to last, there's only one last lever they can actually pull for, which is debt. And to pay off the debt, they just take on more debt. And the debt keeps growing. So you might be wondering, where does all of that money come from? How do they keep paying off all of that debt? Well, their answer is pretty simple. They just keep printing more and more new money. Imagine you own the last rare Pokemon card, right? So there's only 1 unit left of that Pokemon card. Whereas now, out of nowhere, there's millions of that same Pokemon card in the world as we speak. If that analogy was clear to you, you now understand that your money is the actual last rare card in that game. So when they're printing more money, they're flooding the world with duplicates of the money that you are already holding onto. Now, to give you a better idea, we need to look at the US money pile, which is often referred to as the USM2. It's basically all of the spendable money out there as we speak. So if we were to take a look at that same M2 during COVID-19 alone, we can see a whopping increase of 40.95% of the dollar supply during COVID alone. So it's like kind of going up, and then boom, we see like this massive hockey stick type of chart, subtle settles down a little bit more, goes back up as we speak in real time. The current money supply at that point in time within the chart looks like $22.8 trillion, money created out of nothing. So during 2021 alone, we could see how the world was going on this cheap yet massive borrowing spree. They called it transitory inflation, but in fact, all that debt is expiring right now. It was just creating new money out of thin air under the guise of transitory inflation. So to stop a so-called crisis, they just print more money, get more digits into the system, your money loses value, and that is the whole issue that is going on as we speak right now. To tackle that debt, productivity alone is not longer the valid parameter. They need to print more or they have an issue. Now, it's crucial for you to understand that all that printing works like a tax on the money you have. If we look at the first one, we're looking at 8% of a silent printing tax just because of all these digits getting created out of thin air. The second one is a 3% price inflation that we can see. So on an annual basis, that's about 11% of your money that you are losing every single year by simply doing nothing, right? And that also goes along with the new bar that we need to hit. 11% is basically the line we have to hit when it comes down to any type of investment that we're doing. This means your savings in the bank right now are about to buy you 11% less than they did last year. And I get it, in terms of geopolitical uncertainty, it kind of feels safe to visit cash and just stack it on a bank account, but doing nothing definitely has a price. So you could act like most people. I'll just put it into something I know, something that is safe, something that is known, right? You put it into the S&P 500, just a simple ETF, 500 biggest stocks performing at 12% a year. Take away the fact that you're losing 11% underneath and the actual real gain is 1%. So you're spending a decade on risk inside of the market just to end up with 1% net profit. And on its own, it kind of looks like this S&P 500 keeps climbing in and out itself, but then if you divide it by the actual printed money, you're looking at nothing but a flat line. For that reason, the only motive why it looks like the S&P 500 keeps going up is because there's more money that gets printed out of thin air to finance that debt. Even if you go for decades of savings inside of a so-called retirement account, every single year that 11% eroding what you're holding on to can still make you fail in that ability to get yourself a home, a car, anything you'd like to buy later on. It means that a whole generation right now piling all their money into these types of accounts is not getting richer at all. Not because these people did anything wrong, but because the vehicle barely clears the line. Okay, so maybe we could get into real estate, known to do roughly 6 to 11.8% a year. So again, if we were to line that up against the 11% that we're losing a year, barely making anything. Just like the S&P 500, for that reason, real estate runs to stand still, and most of the younger people in these generations simply can't get in because of the barrier. The worst part is even that the inflation number, as we see it on the news, known as the Consumer Price Index or the CPI, mostly tracks basics like milk and gas. But the real inflation actually comes down to the things you actually build wealth with. Things like houses, stocks, and land. That's where we see that reflecting the most. And that's also the exact reason why younger generations are getting priced out of all of these. So no worries, working harder or getting a raise was never going to fix it anyway. And neither was doing exactly what I was told to do with my savings back in the days. Now, that was the uncomfortable truth, but here's why it's all coming to a head right now. Governments and big companies, they don't pay off their debt. They just roll it over into a new loan every few years. In 2021, for example, as I showed you, they borrowed massive amounts of money at near zero rates. And all of that basically got to a point where it hit like this massive wall near 2025 and 2026. For that reason, it all needs to get refinanced right now. And this time, it happens at way higher rates. So the central banks are basically sitting there and they only have two big levers as we speak. We have rate cuts and rate hikes. Cuts make borrowing cheaper, so more money floods into the economy and every single dollar is worth a little less. Hikes, on the other hand, make borrowing more expensive. Right now, the stance is supposed to be neutral or hiking, so we should be safe, right? But look at what the New York Fed is actually publishing in their treasury operations. Because even when they talk about rate hikes, they're silently buying back debt every single week through their operations. So no matter what the headlines are saying, the money keeps getting printed out of thin air. They just don't tell it directly. They do it through their operations in the background. So if you ever got to a point where you got thoughts like, I'm not good enough, it's all because of me, I'm not working hard enough, it's because of how I perform, that's all just utterly garbage. It's a limiting belief based on how they want you to think through the way the system is operating in real time. Because doing everything right inside of a system that prints money out of thin air, devaluing every single dollar in your bank and stealing you from the time you put in to acquire it is one big lie. And I know most of you have been burned before in some kind of way. And so that's why the next part actually matters a lot. Because if things like cash, bonds, and the S&P 500 are the ones that barely break even, what actually clears that line? With old school assets like real estate being out of reach right now for younger generations, the data keeps pointing to two main sectors. Looking at technology and, you guessed it, crypto. Why crypto? Because Bitcoin almost moves in perfect sync / lockstep with the actual liquidity, also known as money printed out of thin air by the banks right now. In simple words, when the banks are printing new money, it flows into the fastest assets first. Since 2012 alone, Bitcoin has been doing roughly 130% a year. That's not me making a promise, I'm just showing you the data. And as this debt keeps piling up, the only true way to resolve this is to print more money until we get to a point of singularity through AI. While that happens, borrowing eventually gets cheaper again through things like rate cuts or the hidden operations I just showed you, making the value of every single dollar worth less again. So that means increased prices all around you. Every single time when that happens, there's basically two camps. You being the consumer that sees like things are getting expensive, I can't keep up. And those other people that are in assets like Bitcoin, Ethereum, all these types of things, knowing exactly how to position themselves. And the best part is these assets don't need to do crazy things. If you can beat 11% a year, you're already outperforming the S&P. So for you to better understand what is needed at this point in time, I made you a weighting tax calculator tool. This tool is the exact tool that I used prior to doing any investments on my own. So the first image you can see shows you a so-called jar system. You just go into the tool. I'll probably make a separate video about it as well, where you fill out your monthly salary and then you get a bunch of buckets showing you exactly where to put your money. It even will show you a presentation of how it will evolve. It's so-called projection. And then over time, you'll also be able to compare both, right? Because doing nothing, as you learned today, is costing you 11% a year. And the Bank of International Settlements has proven that 3 out of 4 people lose roughly 48% of their first investment alone. So usually standing still and doing nothing just puts you in that bracket of consumers that only sees nothing but higher prices year to year. The other side, on the other hand side, is actually the people that can surf that wave and actually make money from that exact same trend. I want to clarify that this is a free tool. There is no catch. You can just go down below this video, claim that tool for yourself right now, use it, get some projections, and you can even export it so you can always keep track of your personal goals. And besides making these types of videos and the actual tools, I'm also helping people closely one-on-one together. Let me show you some examples of the people I work with.
I'm much more risk averse than most people though, because trust currency for me is so important. And then I've taken out 45 grand since then.
I've always been kind of hesitant to get into crypto just because I was worried about situations like that, or losing my password or getting hacked or whatever, but you guys tackled the security aspect of all of that, so I actually feel very secure with not losing. I only put in about 3 grand at the beginning, and within like a month and a half, 2 months, I was able to pull out roughly 15K.
As well as the community, everyone helps each other, so it pretty skyrocketed my understanding of crypto. I paid $2,856 if I'm just about that amount, and got out just above 30K.
I've seen the scams, I've learned a lot since then.
But when was kind of like the moment where you knew this mastermind I joined, the stuff I'm learning, this actually works?
I think it's when I first saw my 3x and knowing that I could cash out.
Yeah.
Because I can just cash out like today if I wanted to and put it in my bank account.
Real people, real results. You just saw it. And we're looking at a actual reality where these people with that same problem like you are facing right now the constant increase of prices, the constant money printing, all that stuff, all these headaches we originally have, these people face that same headache just like you until they actually change something about their actual approach. And I know the fear might be something like, is this another scam? Am I too late? Is this even working? Well, the fact is, none of this takes any trading at all. In fact, you hold your own money the whole time if you were to consider that approach, and nothing at this point in time is hidden. It all comes down to self-custody and absolute digital scarcity online, so you can have your full ownership over your assets and actually find a way to make a second income online without needing to sign up for things like a second job, like dropshipping, Phases, YouTube channels, Steam pages, all that type of stuff. This is not about running another type of business thing. This is actually about changing the whole meaning to what happens with money as soon as it lands on your bank account. Because to conclude this video today, I generally think that doing everything right is not the problem. The system you're in actually is. And to the people wondering, is stuff like this too complicated? Am I too late? What happens? Like all that type of stuff. This is all based on your situation. So go down below this video to actually find it out. So if you want to get your hands on the free waiting tax calculator, it's down below this video. It's actually hosted from a free school community where my goal is just simple. I want to unite like-minded people from all over the world to prevent them from getting scammed like myself initially, give them all the tools, the resources, the insights to at least get ahead by themselves a little bit more. And then of course, get them to understand that the most important aspect is not getting a bunch of free guides, tools, and all that stuff. It's actually getting your hands on the right knowledge and the right guidance at the right time. Now, if you enjoyed this video and you still have some question marks about how this whole model works, I actually recently posted a video that should be somewhere on the screen that runs you down the whole A to Z of my so-called digital ATM model. My goal today was just generally to show you how does the traditional system work, why are you losing like that 11% a year, and how do you kind of tackle that. And this all is actually how you go from always working harder for money to get to a point where your money starts working harder for you.